You're right about the fact that the first quarter results have been a little lackluster. Even as we closed the last fiscal, we had guided for, in fact, a lower level of performance in the first 2 to 3 quarters of the current year. We did anticipate, in fact, a lot of stocks in the market insofar as America is concerned, and that's exactly what we set out to address. So the sales in America came down principally because of we wanted to address the stock situation out there. The other impact is essentially because the fact that price erosion has been double digits in America. So it obviously lowered the sales out there. And there's, of course, a secular impact of inflationary forces across, and that also impacted our performance. So the overall gross margins came down, the sales came down a bit, and that actually hit the bottom line. So this is in line with what we kind of anticipated. But that does not necessarily mean that things are going to remain the same. As we spoke, it is going to be about the same in terms of the performance that gradually improve. The second quarter would be better than the first quarter. The third quarter would be better than the second quarter. And we would come back to levels of normalcy perhaps towards the end of this fiscal.
All right, as we talk about things improving, you expect the second quarter to be better than the first. How is inflation impacting your business? Input costs rising. Are you able or will you pass on those rising costs to the customer?
Inflation is not something which is singular to us. It seems to be hitting every industry around, every company around, and every geography, so to speak. We have also been impacted. Well, in certain parts of the business, it is, of course, possible to pass it on to the customers, but in a lot of other areas, we're not able to do that. And to that extent, we need to absorb it. In America, particularly, the intensity of competition being what it is, the ability to pass on, in fact, the inflation has been much lower.